TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials down 33. The Nasdaq's off 4. S&Ps are off 4. Gold contract up 310. Gold has rejected a lower price once again. You have some high price swings out here. Jobs numbers come out. Great jobs numbers. Bottom line, what does that do? That throws gold down, throws dollar up. And you know what it does, folks? This is just the amazing part. Bonds refuse to die, okay? Bottom line, 10-year is up 2 ticks. 30-year is up 27 ticks. Bonds want higher price, lower yield. Now, what that sets up, this is the largest divergence out here today has to do with the jobs market, the aspect that the Fed will rise rates versus what the bonds are actually doing. And when we're talking rising rates, and this is what I think you have happening actually inside this marketplace. The 10-year and the 30-year don't necessarily have to go up just because the Fed rate is rising, because the Fed rate is going to go from 0 to 2.25 from bank to bank. That's it. That's all we're talking about here. Bottom line, we'll see where that shakes out. King dollar. King dollar's up 349 ticks at 98.26. That is struggling to take that swing point out. It looks like that's going to fail once again. It's been 4 days up in a row trying to get up into that level. Euro is down 44 at 108. The yen is down 2 at 124. If we go back to the gold contract for a second, what you're going to see in gold is that the aspect of how we come down into those lower levels, it has absolutely rejected them. It hasn't even got to the lowest swing point. That lowest swing point being 4 days ago, we were at 1080, hit 1081.40. Prior to that was 1079. Prior to that, the trash down was 1073. Bottom line, what I expect you're going to see out here as the day continues on for Friday, which is pretty amazing, is that you are going to see the higher gold prices. You're going to see the dollar give it up and you're going to see the bonds continue higher. The S&Ps, the Nasdaq, the Dow, you're going to see them continue to go to lower price. Now, the intriguing part is that it took a huge amount of energy yesterday to come down into lower prices with the expansion of volume that we had. So this follow-through right now is a large follow-through. It's an unusual follow-through in the aspect that the amount of energy that it took. What that's saying that the underlying market is extraordinarily weak. We go over and we take a look at the small caps. The small caps were leading the way down. Small caps out here right now are at 120. You can take up any one of these indices, whether you want to take the SPY, the NASDAQ, the S&Ps, and you put those on a weekly basis, and what you're going to see is that you're going to see that you are coming down, and you're coming down with volume. The NDX 100 in particular got hit big. NASDAQ got hit big, and what that was all about, folks, is that was the trashing that the IBB took yesterday in one day. The IBB loves to, when it goes down, it's fast, it's furious, it's all of the above. The IBB is basically taking apart the lower price points with juice on the way down. You can expect more of that. I expect what you're going to see out here today, you're going to see a market slightly lower. You're going to see a volume expansion on the weekly basis, and gold's higher again, markets are lower, bonds are higher. And the whole kicker here is going to be, what can King Dollar do with this swing point that it's trying to get into? The swing point that we're talking about inside King Dollar is the high that was generated out here on the 20th of July, which is 98.31. 98.31. Yeah, I suspect it's just not going to be able to handle it. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, call 855-750-4051 or visit everbank.com/TFNN. Have a great one. Have a safe one. Look forward to speaking to you right back here, 10 o'clock Monday morning.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.